The cracked monitor flickers with freight invoices. Your fingers know the keyboard grooves better than your own face. Double shifts, same desk, same paycheck. The envelope arrives Tuesday. You don't need to open it to know the number grew again. $11,400 for your mother's meds. Your savings, $847. 3 years watching that number. No panic left. Just cold math. You route money for others all day. Watch it flow through accounts you'll never own. Money isn't a destination, it is a system. And systems have back doors. That night, you open a brokerage with $200 absurd. Maybe you buy fractional shares anyway. Automate the transfers before your rent eats it. Building a floor, not a ceiling. Weekends now mean bookkeeping for Goron's construction company. $400 cash. He doesn't know he is losing 11% on 2 contracts. You tell him, his accountant notices. Doors open. 14 months later, the medical debt clears. No celebration. That $600 a month now buys index funds. Rice and lentils taste the same either way. The system wants you tired, wants you spending, but spreadsheets don't lie. Your next move, track 1 expense today. Just 1, the rest will follow. At 29, your $18,000 portfolio feels inadequate. You study real estate licensing during lunch breaks in silence. No announcements, no fanfare, just a Saturday exam passed. A Monday return to your desk. The license isn't a plan, it is a wrench waiting for the right bolt. A developer client dumps a distressed duplex, listed at $74,000 transitional neighborhood. Other agents flee, you walk the property with a contractor. $9 grand in cosmetic fixes, you offer $61,000 accepted. Now the real test financing, 3 lenders reject you, neighborhood too risky. A community credit union finally bites, $440 monthly mortgage. Units rent for $650 each. After insurance and maintenance, $580 net. Not passive income, not glamorous, but real. Month 7, a tenant stops paying. No panic, you draft the eviction notice yourself. File it yourself. You're now the property manager, repair coordinator, and collections agent. By 31, you own 3 unremarkable units. All cash flow, $41,000 in index funds quietly compounding, $12,000 emergency buffer, untouchable. Check your last credit card statement right now. What is 1 expense you could have negotiated? That is your starting point. Your colleague asks how you did it. You tell him straight, slash expenses, automate investments, buy cash flowing assets. Business is T progress. He nods like you spoke in riddles, most do. You stopped caring at 34 when private equity came knocking. They didn't T want your money. They D seen your rental portfolio. They wanted your I for value. Offered 10% carry-on deals. Not salary, a slice of upside. Weekends became vacancy rate studies, owner carrying cost audits. Every decimal mattered, then you found it a dying strip mall. Anchor tenant gone 18 months. Owner bleeding, $14 Chi month on $1 to M-assessed value. You modeled the fixed 2 clinics, a pharmacy, regional grocery. Stabilized NII, $180 Kenya, pro forma held. Presented it cold. 1 question, acquisition cost. They bought at $890, your name was T on the deed, but this was your deal. 2 years later, clinics open, pharmacy signed, grocery anchored East End. Noi hit your number exactly, exit $2 1M sale. Your carry $121. Largest check you D ever seen. No car, no party. 1 hour staring at the wire, $80 into a self-directed IRA private bridge loans at 10% annualized, $41 skin reserve. Markets turn, always open your banking app. What is 1 subscription draining $29 a month? Cancel it. Buy 1 share of a REIT with the savings. That is how it starts. By 37, you're no longer an employee. The LLC paperwork took 12 minutes on a Tuesday afternoon. 7 rental units across 2 states. Now deposit cash into your account while you sleep. That brokerage balance hit $200 last quarter compounding from a $200 start. You're not complacent. You've seen people hit a number and stop moving. Wealth isn't a finish line, it is a shifting horizon requiring constant recalibration. Hire a fee-only planner, not for education, but for blind spots. Depreciation shaves $38 off your taxable income annually. Structures work while you sleep. He suggests a trust. You implement it by Friday. At 40, your net worth quietly crosses $1 million. You check it Tuesday morning. No celebrations. Just a secured line item. Your mother's care is funded. That was always the point. Your sister receives $15 documented as a loan, forgiven silently in the system. She'll never see the paperwork. Rentals nested in LLCS inside a holding company. Accounts segmented taxable, tax-deferred, tax-free. You model a family trust not because heirs exist, but because structure precedes need. Private equity deals now carry your name in operating agreements. Institutional money sits beside yours. You're at the table. Check your banking app again. That $29 a month subscription. Buy a REIT share. Repeat next month. This is how moving objects stay in motion. The market does care about your spreadsheets, that $18 deal. Just another line item in the global ledger. You've seen this before. The 3 a.m. recalculations, the silent panic when LIBOR spikes. Your Kupu S$400 stake represents 22% of his liquid net worth. Yours barely 5%. That is the difference between playing and being played. 2 tenants just filed Chapter 11. Your lender, S voicemail, light blinks red. By sunrise, you Ella have. 1 renegotiated lease terms with remaining tenants. 2 drawn $2 1M from your dormant credit line. 3 shorted the commercial mortgage bond ETF as hedge the machine keeps moving. Your junior partners don't sleep tonight. You will because you built buffers they can TC, that emergency fund personal finance gurus preach. Yours is 18 months of operating expenses parked in T-bills. Open your brokerage app right now. Sell 1 luxury purchase. Convert it to 3 months rent in a medical office REIT. Do this quarterly. The wealthy don't save, they reposition. When the European banking crisis hits tomorrow, you'll be the one buying distressed debt. Not because you're bold, because you kept powder dry when others chased yield. Check your portfolio's cash allocation. If it is under 15%, fix that today. This is how generational wealth responds to chaos, with boring mathematical precision.